Good afternoon, everybody. Howard Greenberg here from Prosper Trading Academy. And I don't just have one legend, but I have two with me today. I've got Charlie Moon, like every week, with me here, the legend, the disciple of trend. And with him also, I have Stephen Orr, one of my longest friends here in DC. You know him as BigBeat from Wall Street, Money.net's chief strategy officer. Steve, BigBeat, how are we doing today?
Man, I couldn't be any better. I mean, hanging out with you two, and Prosper Trading is one of my favorite companies in the world, man. This is good stuff.
Need something to get you in a good mood today after the way these markets been treating us lately, huh?
Yeah, you know what's interesting when these markets, we all as traders, the one thing that we always want to see is volume, right? And we want to see direction. And right now, to me, it feels like it's not neither one, right? I think everybody's saying, "Oh, the market's going down, the market's going down," but we know two things, and when you said this too, I think last week to me, Howard, and it's true, is that these really volatile times that you're expecting and you're not getting them, and the markets are going down, and bear markets are the biggest rips, right? Is when your market just runs up. So why be in heavy options to one side when naked calls or naked puts, right? But that's what we're seeing, right? We're not actually seeing buying of heavy shares of Apple and Microsoft. We're not seeing that, right? We're just seeing the option world exploding. I mean, the last 2 weeks has been the largest options volume in the history of the CBOE. I guess that's why they have new computers down there, right?
Yeah, it's a whole new
Yeah.
floor. You know,
Same
it's
thing
really
in crypto too. The only thing I would say is same thing in crypto. Largest open interest in Bitcoin and Ethereum ever also. But
Yeah.
yeah, Charlie, sorry, didn't mean to cut you off there.
yeah, no, what's really surprising that I saw at the close of today is that Nasdaq finished down -5% for the month.
Yeah.
If you think about the kind of tear that this market has been on here over the last few weeks, you know, we just went down even that much faster. And, what you had mentioned, one of the biggest driving forces has been Apple. When, this market was rallying, Apple barely pulled back. I mean, I
Right.
literally mean barely pull back. It was always a common comment, that's being bantered around is, can't believe I missed Apple. And I said, well, you missed it because Apple never gave us a shot. We either had to buy the highs and hope that, in a bearish market, we're going to see the stock continue higher, or you just had to be patient for your opportunity, which never came. And the problem now is that Apple is pulled back quite a bit and people are buying in, whether it's through naked options or even underlying. And now Apple's starting to trap these buyers because, today, respect, we basically saw Apple reject at a very key level. It's a 200 SMA on the daily chart. And you would expect of all stocks to hold up well, especially Howard with the event that's coming up, that Apple
Yeah,
would
that's
be
why I
kind of,
asked you. I asked you
yeah, I
about
mean, it
it.
makes a lot of sense to buy ahead of the event because of what you're thinking, the run up. But it's like, when is the respite coming? It's like now Apple's only going straight down after it only went straight up. And that's really how this market is kind of trading. Barely any respite. We've had two green opens since last Friday, and we haven't finished positive on any of these days. So, Friday, we were talking about Powell cascading this market, and Steve, I really wanted to get your opinion on that. And seeing how like sentiment has changed. Like, what was your take coming from Powell, and his 8-minute speech? You said,
Yeah, on the run up to the speech, here's this the beautiful setting. I don't know about you guys, but I didn't get my invitation to Jackson Hole. But look, it's very simple. They usually have this nice background of mountains and cows and horses, and we know they don't get to bring their $1 billion yacht to Jackson Hole because they're in the middle of the farmland. But what's interesting is most people don't know this, but Jackson Hole is really based on the Kansas City Fed, right? This is the Kansas City Fed event. And so they want to have a Kansas City event. Okay, great. Why was he in a little office with a few seats in there, hauled over like he was stuck in prison, over the microphone, giving an 8-minute speech, gives a speech, runs out the door like someone's going to steal his underwear, and doesn't give any answers. And he says three things in this is pain, pain, pain. didn't say it once, he said it twice. And to me, I've been saying this for a long time now. Okay, I've been very angry about the Fed for two reasons. The first reason is they've been raising rates way too fast. They've been behind the curve on the front side of it, and now they're behind the curve on the back side of it. That's the first problem. The second problem I thought was that they didn't give us a roadmap, right? We don't know what the roadmap is. It's 50, 75, or are we just shooting in the wind? Are they getting angry? Are they unhappy? Now they're happy. Oh, now they're unhappy. And then you had a chair who said, we're going to have to take some pain. What does that pain mean? Does that mean we got to lose jobs? Does that pain mean that it's going to be more expensive to buy a home? Does it mean that these new buyers for homes aren't going to be able to have a home now? Is it going to be refinance problems now because you can't refinance a home? Maybe you got into a home you couldn't afford. There's a lot of pain that can happen. Losing a job could be a big one. That's not the kind of pain that I want to see. And I definitely don't want to see the market on a low in August of down 5% after we had that run. That's just not the kind of pain that I want to see. But we did see it from Neil Kashkari saying, well, we didn't want to see that kind of a run up. Well, kiss my butt. Neil. I mean, that's not cool, because so many people have money in 401ks. So many people are saving. And why would you want to hurt that too as well? And they did that. That's the kind of pain we don't want to see.
And you bring up a great point. It's like Kashkari basically said this market rally is ridiculous. And
He did.
But you get the sense that kind of the White House plus Powell had this stance that things are going to be better. They redefined the word recession, but now we have Fed members now even more so than ever. It got a little softer for a second, but all of a sudden Bullard comes crushing out of here, and Bester and Bostich, and a lot of very, very hawkish tones. I mean, Charles Evans out of Chicago, right? Charles Evans is one of them.
I mean, I'm waiting for their Instagram accounts. I mean, TikTok. Yeah. Maybe Neil's going to do TikTok next. I don't know.
No, but like what you were saying is totally right. So let me just bring this up really quickly here. All right. So what we've seen here in the markets is that they've gone back and forth on their speculation. Now, a week ago, it says 61.39. 2 days prior to that, we were 60-40. Okay. 60-40 as in 60% belief that it was 50 basis point, 40% that it is going to be a 75 basis point hike. And now we're at this 70, basically 70-30 at this moment. So the market temperament, market sentiment has kind of traded just exactly what we were talking about. We're unsure. It's a possibility. It's a maybe. We think it's going to be 75. But what's really glaring for me is not only what Friday's action was after Powell had spoken, but how instantly we were finding support at critical levels, having them immediately revert back to massive resistance. And today, after that beautiful gap open and bullish response to our crazy ADP report, which the White House have warned about. It was instant rejection, and now we're headed towards this gap fill. And what's really interesting, Howard, and I'm going to turn this over to you so you can kind of project on that BTC, is that Bitcoin defended their lows like a champion, right? But the markets aren't showcasing as such. Now we're starting to see that disconnect again. And this may be actually a great time for Howard, as opposed to, any buy-side traders that are taking place in the markets. So I guess let me pull this back. I guess if we start pulling back here, Steve, quick question. What is your thoughts, BigBeat?
I can tell you the exact answer. So
hold on. What is your thoughts about the markets potentially swinging down and making a new 52-week low? Do you think it's possible based on what the FOMC actions have been and how the market has reacted to the FOMC?
That's a very good question. To answer the first question, I can tell you exactly why the market's selling off the way that it is. Because retailers are buying in the equities markets, they're buying in the options markets, and then they're buying into the crypto markets, right? The institutions are the ones that are selling into the RIPS. they're saying, you know what, I've got window dressing, as we call it on Wall Street, to handle, right? So here at the end of the month, there was 4 billion market on closed sell orders, right?
Yeah.
That wasn't retail. That wasn't you and me selling.
Of course not.
That was Citadel. That was Morgan Stanley. That was Goldman Sachs. That was JP Morgan, who had a lot to sell. But you know what they didn't have a lot to sell? They did not want to sell their crypto. So when you have institutions that are looking to buy and retailer buying, they're going to hold it up, right? There is some window dressing to go in Bitcoin, but not as much as there was in the overall stock market. When you have price to earnings and price to book value so out of whack, it's easy to sell. And of course, as everybody else knows that from me, I always believe the market has one way to go, and that's the path of least resistance. And in this situation, the path of least resistance is the sell side. To the second question that you had, it was a 52-week low. Oh, hell yes. The market can do anything. The market can stay more liquid than we can ourselves, right? And so, yeah, I had Todd Horowitz from Bubba Trading on not too long ago, who was an independent trader in Chicago. And you know what he said to me? He could see the SPY going to 350, 300, 250. Wow. And I paused and I'm like, okay, you do realize we're at 400 right now in the SPY, right? And he's like, yes, but I don't know the timeline, right? We still have money to work through from COVID money. We still have money to work through from, the average retail trader in it. We still have institutional money that came in. We still have PPP loans that came in, unfortunately, that went into the stock market. So there's a lot of first before that happens. But right now, yeah, the market could go lower. I don't think it's going to happen because we've already gone through a bear market. As JC Peretz, my friend from All Star Chart, says, if you think we're going into a bear market, we're already in a bear market. We started a bear market back in January. We're already in a bear market. So my problem is not when do I buy. I just keep buying. I don't stop buying. Because why? Because my screens, no matter if I roll them out, scroll them out, the further I do it, from left to right, it's always higher on the right-hand side. So that's why I keep buying.
I totally feel you.
Echoed that. I was talking about that today. Again, people ask at what price you buying Bitcoin every time under 20, right? I think I said it yesterday,
yeah,
or the day before in your show, Steve. Bitcoin under 20 to me is extreme value, and I pick up more every time. I
think the big question for you, Howard, is what does it cost a miner to mine a Bitcoin, right? That's what's also keeping the price up.
Depends on the miner. We're going to see there. That's actually, it's funny because I've been big on the mining companies, and we've been talking about it a lot. Did very well with Riot and Argo. But I think I'm getting out of my positions here because difficulty just hit all-time high. So now their costs are going to go up again. So now their costs are going to start to increase. And the price of Bitcoin isn't moving with it in tandem. So what I look for is the difference, in between that. When the hash rate continues to go up, difficulty continues to go up, but price doesn't follow fast enough, it puts a little bit more of a squeeze on the miners. So we see a couple of things, and that causes a little bit of a spiral, because then they get under pressure. They got to pay their bills still. How do they pay their bills? They have to sell some of their Bitcoin. So it triggers a couple of different factors in there that I'm worried about. A little bit more capitulation from the miners that get into it. We saw that in June, right? We saw a lot of outflows from miners. It really had tapered off, but this could cause it to taper back on, for them to go a little bit more risk off right now there. So those are a couple of things to keep in mind.
But if you take off the Bitcoin and take off Ethereum and you go into the altcoins, they also seem to be holding pretty steady as well.
Yeah, I mean, pretty well. The altcoins, quite honestly, have outperformed Bitcoin, starting to close down on Bitcoin dominance. It happens. It's cyclical, though. That comes and goes. It's waiting just for Bitcoin's next run up. Basically, we saw the run up to 23, 24, 25, and now we've come back down. When we see that next run up, which will probably head us towards 28, again, we'll outpace the market and go from there.
I mean, for me, I have to look at the Ethereum merge, right? That's going to be a big question mark with price to work and price to stake. It seems that the ESG world has really been harping on good things on Vitalik for this move to the merge.
There is definitely a little bit of a coordinated attack against Ethereum in general right now. We're seeing on a couple of different fronts, whether it be proof of stake, that's now a mistake. All we've heard for 4 years is that it's just taken too long to happen. Now that we're about to have it, coming out of the woodwork are people who now say, this is the wrong way to go. And I get where some of the concerns are. Between Coinbase, Kraken, and Lido, you basically have more than 66% of the entire amount of Ethereum that is staked in those three people. So there could be some sort of collusion or censorship.
I just saw a picture of Vitalik Buterin. I think he's definitely got a hard on for it.
I was wondering if you'd talk about that picture.
As we all take a drink on that one.
Right? Yeah. I'm gonna leave that one alone. It looks like he was having a good time.
Oh my God.
On that note, one of the
hilarious.
things that I always look for and to see how people are feeling about trading is I use my Gmail, right? I look at my promotions tab, and if I start to see promotions tab saying 10% off, 20% off, okay, there's not a real big problem here. If I start to see 50, 60, 70% off in retail, there's a problem in retail. People aren't buying. People are saving their money. And if they're saving their money for Nikes, they sure as hell ain't buying Apple stock. They're sure not buying Bitcoin and Ethereum if they can't help it, right? They really got to, one of the news articles I saw yesterday was the sheer number of people that aren't paying their rents.
Yeah.
Behind on rent. That's a massive problem in this country.
Rent and mortgages now.
Right.
Yeah. Credit card debt.
In 2007 and 2008 when you didn't pay rent.
That's coming up. Charlie, you were talking earlier with us about the pay now, or excuse me, opposite. Get buy now, pay later for food. People are using it.
For food.
Yeah, for groceries. And Howard, you and I off record have talked about, the car loan bubble and how people have already hit that, not only that default threshold, but even higher. And again, for the listeners, if you're curious, Steve BigBeat has his own show, and Howard and I are on weekly, and we talk about all sorts of subjects and topics, and these are topics that we have discussed, and it's just getting ever so apparent that since COVID, people had saved up a lot of money. They ended up spending a lot of money because that's usually what happens when you're kind of confined and just tied down, and then you're free and you're able to kind of do about what you would normally do, which is quote unquote just live life. And we've seen that people have overextended themselves. Howard had mentioned a few times here about credit card debt being at historic levels. That's absolutely true. There was some crazy number that I read about where a vast majority of the credit card debt was ended up wiped out during 2020. So now we're seeing this rising debt. We're seeing corporations laying off. Another story today, it was GDRX. I didn't know if you saw that. They're laying off 16% of their workforce.
Yeah.
And the Fed talk and hawkish talk, and they haven't said the R word. Everybody keeps denying the R word.
Recession's here. I mean, that's silliness. What's interesting is pre-COVID, the savings rate of the American people was right around 5.5%. That has been their Goldilocks. I don't feel that's a good number. I like it when it's around 7 or 8 or 9%, but they had no reason to save, right? Because interest rates were super low. But then COVID came around and the savings rate popped up to about 28%. And guess what they spent that money on? Let's see. GME stock, AMC stock. They bought iPads. They bought iPhones. They bought new Android.
They bought Shiba.
I didn't get a PP. I don't know about you guys. I didn't get a damn check from the government. But I will tell you this much. Now the savings rate has gone below 5.5%. Right. That's a problem. And now you saw where they took some of that money and they actually paid off their actual Visa MasterCards, right? But we're seeing loan forgiveness. We're not just seeing loan forgiveness in the school, which I think is a good thing. We're also seeing loan forgiveness in PPP loans. We saw loan forgiveness in all the COVID loans that went out there. We're not getting any money back. Well, guess what happens? That's the debt of the United States. We're now at over $31 trillion in debt. Oh my God, when I was in the White House, the Clinton administration, that's unfathomable, right? I mean, we saw 7, 8, $9 trillion of debt. 31 trillion. Now it's just a number at this point, right? But it's not really a number because the Chinese have to pay for it, the Japanese have to pay for it, and they're not paying for it either. And you're going to start to see a split of this world right now, where Russia and China are getting together, and the United States and the Western world that's going to be even bigger.
Right. That divide's definitely going to get larger.
I mean, these are some things that, and I can understand why the market, I can understand why the macro side of things are actually telling us, you know what, maybe I need to lighten up and not be so heavy. And maybe I need to lower my margin levels. I'm keeping mine up. I'm still buying because my thesis is still the same. My thesis is going to be November.
Would you buy his Disney stock? They just had news.
I just saw the new Disney news about Amazon, the Prime
the
kind
membership
of
program.
Yeah, the membership program. Listen, I live less than an hour and 15 minutes from Orlando, and I literally could be at Epcot in an hour. Look, will I be probably joining that membership? Yes. Do I have family members and friends who probably be joining it? Yes, because I already have Disney Plus. What's one more thing to give the mouse, right? But the truth of the matter is, Disney World owns. They're very smart. They do it right. They get the kids early, and then the parents go to the vacation club, and then they all end up on a cruise together. While I don't cruise on Disney, I'll have a few drinks at Epcot with you guys.
I'm down. I am so down.
There you go.
Speaking of cruises, I was looking at the Virgin Voyager.
Yeah.
Well, I was gonna bring that up, Steve. You mentioned it earlier. And one thing that I learned from you too is when I see those ads all of a sudden hit my inbox, that's when it's sometimes a good opportunity to pick up some bargains. And I started to look at Norwegian today because of the fact that I noticed all of the cruise companies have all of a sudden sent me some ridiculously low prices for cruises. Like you're saying, I mean, just
people
ridiculous.
Can't afford to travel right now.
Right. Well, I'll let you know we're going in February with Aaron Schurz. If you want to come join us in February on Royal.
You going an RCL? I thought you weren't an RCL guy.
That's my thing, man. I only go on RCL.
So since we've talked about crypto and stocks, what about the breaking news today about Michael Saylor facing a lawsuit from DC that alleges he failed to pay more than $25 million in income taxes? The headline was
is it $25 million or 25 million Bitcoin? I'm not sure which one he has the most of right now. Look, it's not going to be called MicroStrategies any much longer. So we call the Bank of Michael Saylor eventually.
Yeah,
right?
they're suing the company as well.
Right. I just don't. $25 million to him is lunch, right? I don't think he really cares too much, right? On his yacht's pretty big down Potomac. I've seen it a few times. Look, I get it. What does he care, right? I mean, the city get $25 million. Still not really a big drop in the bucket. I guess they're going to sue him, get some money out of it, but eventually,
the AG here in DC, Mr. Racine, is also known to be looking to
a little aggressive, right? Yeah,
he's aggressive. He has made it clear that he would very much like bigger roles, maybe in the federal government, and
he's trying to make a name for himself or a bigger name for himself.
Yeah,
I mean, is his last name Gensler too? I don't. Is it?
No, there's only one of those.
I mean, between the big swingers up there, I was going to say another word. I missed that word, that 4-letter word. But between Gensler and Saylor and Vitalik, I don't know. They're all in the same boat right now.
Man, Vitalik. Speaking of Vitalik, I don't know if I should show this. I'm just going to pop this up really quick.
Should I avert my eyes, Charlie?
I don't know. Nothing like you haven't seen before. This was the picture in reference, and it says ETH pumps because of this picture. I mean, in all honesty, it makes sense. It is funny. It is a bit of a troll in a sense in terms of.
Did you see the other one where the guy said this? My girlfriend got Vitalik's number. We're no longer dating, I guess.
And see, I appreciate how the community can run around this because God forbid this ever happens in the equity world.
The three of us we're out in the public all the time, especially on video. Does it ever bother you guys that we may get trolled someday?
Oh, I've been trolled.
Oh yeah,
I've been trolled. Of all places, I was in Georgia. and I randomly had someone come up to me who was in Atlanta visiting from Ontario.
Hmm.
So at that time, I was doing a lot of BNN hits, which is their only financial network out there.
Right.
And apparently this guy's a fan of BNN, just recognized me. And this was right after I had gone on ahead of Lulu earnings, and I was discussing, exactly what I felt, what I expected the stock to do. And it just so happened that it was one of my best TV appearances because I called out basically the move. And that's what the guy kept talking. My wife, or not my wife, my best friend, who was my best man, turned to me and said, "Is this for real?" And I'm like, dude, I don't know. It's never happened to me before. It's never happened again, but
Right.
this is the one moment that.
No, I've had a few moments. People ask me, they'll yell "Big Beat" out in the public or want to get a picture or something. But I think one of the cool things about what we're doing is is that we're trying to educate the public. And I always say this a lot of times. Just because you have a YouTube account and a microphone and a camera in front of you does not make you a trader. It doesn't make you intelligent, right? It just makes you obnoxious and narcissistic, which is okay because I think a little bit I am. But the truth of the matter is that we have the pedigree and the knowledge, and we've been doing this for so long that's what's cool about it, right? Is that we are willing to give back to the public because we have done it. We've set the game. We know how it works, and I feel like it's not a level playing field. And I really applaud you two of you guys for doing this. Dips to Rips should get big props for doing this because, quite frankly, there's not a lot of us that are real on Wall Street anymore.
I agree, man, and much love to you for not only that, but for what you do as well. It's the same. I agree 100%. In terms of, and I've said this on this podcast, I say it to all my friends. In terms of, knowledge and information on crypto, the only person I would ever reference would be, Howard. He's actually the only person I really trust outside of one of my close friends. But one of my close friends is also a hermit who never leaves his house and sleeps 14 hours, so I never know when I'm gonna get a hold of him. Steve,
Shirley, I remember the day when Scott Bauer asked me, do I know anybody in the crypto markets or world that would be interested? And I said, hold the horses. It's Howard Greenberg. Hondo, that's it. Game's over.
Yeah, Hondo's a true legend, man.
Yeah.
Thanks,
guys. Much love, man. So we'll wrap this up here in just a bit. I guess I want to get some final thoughts.
Yeah.
Earnings came out today, a lot of growth names. I don't know if you got a chance to catch up to them, and I don't know if you follow this sector. It's a sector that's near and dear to my heart, but it's cloud. It is cloud or SaaS type companies.
Mm-hmm.
And the three biggies that I reported today, MongoDB,
yep,
Okta, and Viva are down huge, and they're down big after pretty good reports under these market conditions. And this kind of fits with how CrowdStrike performed today, which was in a total and utter meltdown. Like, it really couldn't find a floor, and their numbers and guidance were really good. So we're seeing a mixed bag. Pure Storage, I'm not sure if you're familiar with PSTG. Yeah. Mm-hmm. They were up last I checked. Yeah, they're trading like 12% higher here. AI is in the dumpster, which makes sense because it seems like all of a sudden AI, the flavor of the month, was 2 years ago.
Right.
Yeah, there's another. Sentinel reported today. Sentinel, which was actually tearing it up to the upside, is now melting down. Another really strong report and strong guidance as well. Q3 sales came in at 111 versus 108 expected, and full year sales came in at 415 to 417 range versus 406 expected. And again, usually these are, we go back, 52 weeks ago, and these stocks are probably up 18, 19, 20%. So what are your thoughts now, seeing how the market has been pricing in growth, even though growth is still reporting strong and they're showing the ability for growth, like the growth cycle is still strong. So seeing that these stocks are way off their highs, how would you digest?
So the biggest growth name right now, but unbelievable in the cloud service industry, is unbelievable. It's Microsoft. It's Azure, right? Microsoft has been kicking AWS's butt the whole way. Now,
huge chunk of their market share.
Huge chunk is gone. And Amazon. So what are you doing with the rest of it? It's just scraps, right? If you've got Microsoft and Amazon going at it. So if you're fighting over the scraps for the cloud storage, you have to figure out what cloud storage are you marketing to. MongoDB is database storage, right? It's really good storage there. So are we going to have less databases in the future or more databases in the future? Are companies going to spend more time figuring out who we are and have a database on all of us, or are they going to get rid of that? No, they're going to have more databases. So that's obviously going to happen. I also think databases that focus on metaverse, like 3D, like Unity, right? Those companies that are making a picture is one thing, but a 3D picture it takes a lot more storage, right?
Right.
So if you're focused on the metaverse, that cloud storage is going to be really, really hot because they're going to need exponential. I'll tell you a good example of that. We're working on newsletters here at Money.net. All of a sudden, I put a whole bunch of email addresses in there, and they couldn't handle it. They had to upgrade their servers, right? And we did that because we thought they could do it immediately, right? They had to go back. AWS, it's just literally a click button, boom, and they can increase the storage, right? If you find storage companies that it's a click and it turns a bigger number on for you and a bigger storage, those are the kind of places that I would say definitely. More harder storage, say like Pure Storage, might be a little bit harder, right? And I think that you're gonna.
I really love Pure Storage in the longer run. I actually think they're actually making some pretty good moves too.
But if you think about Western Digital and Seagate Technologies, look at STX today getting slaughtered today.
Oh
right?
Yeah, their guidance.
Right, that's hard.
My
that's
gosh.
hard. Who's gonna? I mean, in my new computers, I don't have massive big hard drives. Back in the day, you had Western Digital, you had Seagate because you wanted to buy the biggest hard drive you could buy. Today, we don't even need that. You need 1 terabyte on an SSD drive. The rest of it gets shoved up to the cloud, right? And my cloud right now, for me personally, retail is Google, Amazon, and Microsoft, right? OneDrive at Google and Amazon.
Steve, what do you think of then about Filecoin? I know that price has really moved up recently.
Yeah.
Those storage, shared services like that, Render, another one that I'm a big fan of. Render gets involved in GPU and the rendering of these 3D movies and animation that we see that are so huge out there. What do you think about that? Goes into your metaverse part, right?
Absolutely. That's very, very important. And especially when it comes to crypto, because the number of hackers that are coming on crypto, it's pretty big, right? So I think it's a problem.
Again, remember, they've never cracked any of the databases. So again, the shared ledgers aren't the issues, the protocols themselves. It's the dApps built on top. It's those bridges.
I see a news piece here for you, Howard. A number of addresses holding 10,000 plus coins on Ethereum just reached a 3-month high of 1,191. It seems to me that Ethereum is going to be the big winner in all this eventually.
Could be. We got to see what happens here. Like we said, Ethereum is under a little bit of attack, whether it be the Tornado Cash issue and developers and how is DeFi. That's where all the total value locked is really on DeFi is Ethereum. So if governments are really going to go, too hard after that, we could see some issues there. But we won't know we're not going to know anything for sure for close to another year before we see, meaningful regulation here in the U.S.
But I'm sure Vitalik is working hard on that problem.
You just can't stop. Okay, everybody. Well, thank you for joining us. Howard Greenberg here with our first guest at Dipster Rips, the man, BigBeat, Steve Orr from Money.net, and with Charlie Moon, the disciple of trend. Please do us a favor. Share this with your friends. Hit the like button. Comment. Let us know what any stocks or cryptos you'd like us to take a look at the charts. We're always willing to do that. And again, for Prosper Trading Academy and Charlie Moon, Howard Greenberg here. Thank you so much, everybody. Appreciate it.
Money.net, money.net, money.net.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC PTA makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.